Good evening, everyone. Welcome back, students. Today we are going to deal with important topic, the topic which comes as a compulsory question, the very first question of your paper, and which carries the maximum marks. Plus, at times I've seen that students are slightly uh, pressurized by this type of question. But today I'll try to help you how to answer this. So our topic is today computation of tax liability. Just a minute, students. So this topic is covering the computation of tax liability. Now this chapter is a virtual amalgamation of all the chapters, the entire syllabus, you can say so. And this chapter also deals with a very important part of this income tax law. That is the selection between the old scheme and the new scheme of computing the tax. So I would like to just touch upon this for first 5-10 minutes before I take you through the question answers, so that seems to be very heavy for you. Named as the computation of total income and the tax liability, and also tax optimization. Now, what is tax optimization? Because many times they will ask you in the question, he suggest the best option of optimizing tax. So optimizing means where you will get the minimum tax liability. Now that will be by comparing the tax liability under both the schemes, that is the old scheme and the new scheme. And then depending upon which scheme offers you a better tax position, we will recommend that scheme. That is what is tax optimization. Now, with this backdrop, let me take you to the further detailing part of this particular topic, where we are going to see how this particular chapter works. So in this chapter, you are first supposed to find out the total income. Now, as you know, total income, which is defined in the Income Tax Act 1961 to mean income as per Section 5. And Section 5 says that what will be your total income, that will depend upon the residential status. So you start with determining the residential status, and on the basis of residential status, the total income. Then comes the next step. After you have decided what incomes you will be taxed on in India as per the Indian tax laws, as per Section 5, read with Section 6. Then comes the next step. The next step is now dividing these incomes into your 5 heads or 5 sources. Now, if you remember my earlier classes, I have always been saying how to determine that your income will fall under which head or which source. The answer is you have to see the first section of every topic, which I call as the charging section. So the charging section, which is the first section of every head, helps you determine as to which head will be your correct head for computing the tax liability. And according to that, you will be deciding, you will be computing your tax liability, and accordingly, you will be paying the tax. Now, this is how we determine the tax liability. This is how we determine the heads. Now, once you have determined the heads, now you have to classify whatever receipts you are having into those 5 heads and apply the computation provision of each of these 5 heads. After you apply the computation provisions, you decide what deductions will be allowed or not allowed under each of these heads. And depending upon that, what deductions will be allowed or not allowed, you have to then take the final call of deciding the method or deciding the scheme. So we have the old scheme and the new scheme. Now the old scheme and the new scheme, it impacts at both stages. First, it impacts you at the time of computing the headwise income. Second, it impacts you at the time of deciding the deductions, what will be allowed, what will not be allowed. Thirdly, it also impacts in the tax rates and the final tax liability. So there are multiple layers how you reach to the final tax liability in case of your different heads. Now, depending upon which option will be suitable, you have to proceed with computation. But here there is a catch. Students, it is not easy to determine which option will be best at this stage. Means what? At the stage of deciding which head you should follow. So the approach or the methodology is that you will have to first compute your total income. Firstly, by the old scheme, then by the new scheme. And after you have done that, after you have done the computation by both the schemes and you have reached the final tax liability, then only you can decide as to which option will be the most suitable option. So, in short, what I mean to say is that at this stage of computation, you will have to first do computation by both the methods, and then finally you can decide which method you will ultimately opt for. Now, there's one more topic called as clubbing. So clubbing is basically where the law asks you to include in your income the income which, at least on paper, on records, is earned by some other person. So the income is earned by another person, but because of presence of some conditions, some parameters, the law has made it taxable in your hands. So income appears in the bank account of some other person, it appears in the books of some other person, but it will be deemed that you have earned the income and it will be taxed in your hands. This is what is the provision of clubbing. Now, when you are dealing with this clubbing provisions, you have to be very careful because clubbing provisions have different ifs and buts. And only after you are able to satisfy all the conditions of clubbing, then only the clubbing provisions will apply or not apply. After this, you compute all heads, including the clubbed incomes. Certain heads may have losses. Wherever there are losses, now you have to apply the provisions of set off. First under the same source or same head, then under other heads. And what cannot be set off can be carried forward, will be carried forward to the next assessment year. Then you reach to your gross total income. From that, depending upon the scheme, you will decide and you will deduct the deductions and you'll reach the total income. Now, on this total income, you have to compute the tax. Now, let me take you to the tax computation. So now all these steps are explained in detail. I'm not getting into those steps. Now see, there are multiple deductions which we have studied in deductions chapter, but only few of them are available in the new scheme. What are those? So deduction under 80CCD2, that is employer's contribution to the national pension scheme. Similarly, 80CCH2, that is again the central government's pension to the Agniveer scheme or the Agniveer corpus. And then last is 80JJAA. These are the only three deductions under section 80 which will be allowed in the default regime or the new scheme. Remaining all other deductions will be allowed if and only if you are in the old scheme, that is you opt out of the new scheme. So this is going to be important, students, whenever you are going to apply this chapter or whenever you are going to compute the total income under this chapter, this point has to be kept in mind thoroughly, which deductions are allowed. Now, after allowing the deductions, you reach taxable income. Taxable income has to be rounded off to nearest 10 rupees before you start computing the tax. Now, again, under the new regime, that is the default regime, the tax rates are all multiple of 4 lakhs. So up to first 4 lakhs nil, then 4 to 8, 8 to 12, 12 to 16. So it is easy to remember. So tax slabs are multiple of 4 lakhs. Further, the tax rates are all multiple of 5. So it is 5, 10, 15, 20, 25. So that also is easy. You can easily remember, you can easily apply. So this is how the tax rates are given, and it applies up to 30%. So 30% is the highest slab. Then you come under the old scheme. Under old scheme, the slab basically is of 2.5 lakhs. But this is for citizens who are not senior. Those who are seniors, that is 6 years of age, plus they are resident in India. For them, the basic exemption limit is up to 3 lakhs. And those who are super seniors, that is age is 80 years and they are resident, for them, the basic exemption limit is of 5 lakhs. What is important to be noted is in the new scheme, there is no differentiation of basic exemption limit depending upon the age. So irrespective of your age, whether you are senior, super senior, for everyone, the exemption limit is 4 lakhs. However, in the old regime, there are 3 different possibilities and there are 3 different basic exemption limits. Thereafter, beyond 2.5 up to 5 lakhs, the tax rate is 5%. Then after 5 to 10, the tax rate directly jumps to 20, and above 10, it is 30%. So these are the tax rates. Besides this, as you would be knowing, if your income includes any special rate incomes, so special rate incomes covers 112A and 112 long-term capital gain, 111A short-term capital gain, 115BB and 115BBJ. These are the tax rates on winnings and virtual digital assets. So these are having special tax rates. Now comes another point, that is surcharge. Now again, depending upon the scheme, there are 2 different surcharge slabs. So firstly, under the new scheme, that is a default regime, if your income exceeds 50 lakhs and it is up to 1 crore, it is 10%. It is exceeding 1 crore up to 2 crores, it is 15%. Now, after you cross this 15%, that is after you cross 2 crores, you have to check your total income by excluding some incomes like dividend, capital gains under these 3 sections. And if this amount excluding these incomes is exceeding 2 crores, on that amount it is 25%. And the tax rates on these incomes, that is 112A, 111A, etc., will only be 15% because that is the highest surcharge rate for these income. Further, where your total income, including all these incomes, exceeds 2 crores, then on the entire income it is 15%. Under the old regime, it is again similar, between 50 lakhs to 1 crore, 10%, 1 crore to 2 crore, 15%, again above 2 crore. Now here there is another limit, which is 5 crores. Now there was no such limit over here. So here the highest block is 2 crore and the highest surcharge rate is 25%. However, here between 2 to 5 crores and excluding these incomes, it is 25%. And thereafter, if your total income excluding these special rate incomes is exceeding 5 crores, the surcharge rate is 37%. The tax rate on these special rate incomes, the surcharge rate is always 15%. So this is what is a difference in the surcharge rate as well. And then the next difference is in the rebate. So you have a rebate under 87A. Now this rebate is if you are in the new scheme and your income is not exceeding 12 lakhs. So it is up to rupees 12 lakhs. Then you are allowed a rebate up to rupees 60,000. So in that case, virtually your tax becomes 0. And if your income slightly exceeds 12 lakhs, then there is something similar to marginal relief, which is there in case of surcharge as well. Then if you're in the old regime, then only up to rupees 5 lakhs, you have this benefit of rebate, which will be tax up to 12,500. And besides this, after adjusting the surcharge, you have the final amount which has to be added. That is for the health and education cess, which is a fixed rate at the rate of 4%. Plus, under the old regime, you have minimum alternate tax also. Now, this minimum alternate tax, one is MAT for companies, which is not in our syllabus. And for other than companies, you have this AMT, which is alternate minimum tax. Now, alternate minimum tax applies wherever you are a person other than a company and you have claim deductions, which includes deduction under 10AA, which is for SEZ units, or 35AD, which is for some specified businesses in that particular case. And if after adjusting these deductions, your total income is exceeding 20 lakhs. If your total income is not exceeding 20 lakhs, AMT would not apply. So you should be person other than company. You should have claimed these deductions, and your adjusted income, that is after adding back those deductions, should exceed 20 lakhs. Only if all these conditions are satisfied, AMT is applicable. In case of AMT, the tax rate is flat 18.5%. Most important thing, those who are covered under the default tax regime under 115 BAC, alternate minimum tax is not applicable to them. You have to keep this in mind. Alternate minimum tax applies only in case of the old scheme. Where regular income tax payable by a person for a previous year as per normal provision is less than AMT, the adjusted total income shall be deemed to be the total income. In short, the tax which you have to pay finally is your tax as per the regular provisions or AMT, whichever is higher. Wherever AMT tax is higher, in that particular case, you will be required or you will be eligible, entitled for a AMT credit, which you can utilize in the future years. This 18.5% is the flat rate, irrespective of what incomes are covered, whether it is long-term capital gain, short-term capital gain, it makes no difference. Plus surcharge, wherever applicable, that is above 50 lakhs, and higher health and education cess, which is compulsory 4%. This tax credit is wherever AMT is payable because your regular tax is less. So the excess amount which you have paid over and above your regular tax can be carried forward and set off in future years up to maximum 15 further years. That's it. So I think this much is sufficient. Baki to everything is relating to computation. Now here generally students, if you remember these sums basically are PGBP sums only. So what you do in case of PGBP head, same type of questions come here. And in this particular case, you have to do computation of total income, which includes PGBP basically, and then the other heads also. So let us proceed. So now this is a question. I've uploaded this on the portal, but in case you have not downloaded that, you can just take a screenshot of this, because I'll be shifting the page up and down, so it should not be a problem. So just take a screenshot, students. Done. And then this part also. Okay. Done, students? Chalo. Now see, if you basically see, the question is a PGBP question. You are given a typical question of PGBP, where you are given a trading P&L account with sales, closing stock on the credit side, then opening stock purchase, all expenses, then some other expenses on the credit side in the P&L portion, and then some adjustments. Now what you are supposed to do is compute the total income of Mr. Amit in the most beneficial manner. Correct? Now when they say most beneficial manner, you have to apply both these schemes, new and old. And in old, you have to also check the AMT applicability. Correct? So let us start doing that. I'll just take a blank page. You may start solving, students. You may need not wait for me. Correct? You may start solving at your end. I'll just take a blank page so that I can also start solving along with you. So let us start. Yes, very good evening, everyone. Navneet, Aditya, everybody who's present. Sure. Let us start solving. So, now see, your main answer or the first part of your answer should be the main computation. So, you should write the assessee's name. Who is the assessee? Mr. Amit. So, it is individual. Age is not given, so we assume the person is not a senior citizen. Nothing is given, so I also assume the person is ROR. And PY is our relevant PY 2025-26. Okay, so income from salary, income from house property, income from EGBP. This will surely require working note. In fact, this is your main working note. Then in this question, do you have, so we have income tax refund, we have warehousing charges. Income tax refund includes salary, includes advertisement, miscellaneous, good GST, purchase, warehouse, building, depreciation. So interest on loan includes, okay. So effectively, there is no much other heads involved in this question. So it is income from capital gains. So these are virtually nil. Income from other sources. There is only one item, so I'll write it here itself. So this is my gross total income less deductions under chapter 6A. Now remember students, the first working we are doing is new scheme, and then parallelly we'll do the old scheme also, correct? So this is my total income. Then I'll compute tax on it minus TDS, TCS, advanced tax, correct? So this will be my final tax payable or refund due, correct? Okay. So this page I dedicate for the main working, and then we can start with our working notes. So working note 1, calculation of PGBP income. Chalo. Students, I want you all to involve in the working part and not only looking at the answers. So I'll just give you 10 minutes. I don't want you to solve writing completely because that will take time. But at least if you can, on your uh, this, just do marking and do just working orally. Orally in the sense may not be with proper entire detailed working, but at least if you can just do it uh, by marking what is allowed, what is disallowed, that should be sufficient. Chalo, I give you 10 minutes. Okay, I should open this if you want. I'll open this also for your reference. Chalo. So in case you all have done your markings, let me start. So see, this is the first sum. I will, I have purposefully selected a sum which is not having complication of other heads here. That will be our later sum where all complications will be there at one place. So this sum, we will have lesser number of adjustments, but yes, we do have some computations to be dealt with. So I start with profits as per accounting P&L. Then you have some add and you have some less. Now see, as per accounting, it is 5085. Now add. Now we'll go through the debit side along with the adjustments given to see what are the items which need to be added. So firstly, just broadly going through the names, if something outrightly can be added, if it is not related to business, there is no such thing. So whatever will be added, that is because of adjustment. So first is salary. It says salary includes 30,000 paid to brother, which is unreasonable to the extent of 5,000. So out of salary, there is a disallowance of 5. So there is some adjustment here. We have to add 5 on account of this. So salary to related person. Section 40A 2. To what extent it is unreasonable? It is unreasonable to the extent of 5. Then the other adjustment, advertisement expense includes amount of 2,500 paid as advertisement, which is published in the souvenir of a political party. Now, you know that section 37, which is the general deduction section, allows deduction for all business expenses, but it has some restrictions. The restriction is that whenever any payment is made as some type of advertisement in the political party's brochure, tract, pamphlet, it will be fully disallowed. On similar lines, there is one more thing. Miscellaneous expenses includes 1 lakh, which is paid to political party by way of check. So this is like a donation. Again, that is not allowed as deduction in case of PGBP computation. So in business, there is no scope of making payment of donation to political parties because it is a non-business expense. So that will also be disallowed. So both these amounts, 2,500 and 1,000, both shall be added. ADVT in political party. This is as per section 35 2B. Similarly, donation to political party. This is anyways a non-business expense. So that is entirely disallowable. Correct? Next. GST includes 5,300 charges as penalty and 1,270 towards interest. Now see, whenever there is a penalty, you have to be careful with one point, that whether the penalty is for contravention of law, where you had an intention to evade tax, or it was a general penalty. If it is a general penalty where there is no intention to evade tax, it will be allowed. However, if it is with a fraudulent intention or if it is for any act which is forbidden by law, it will be disallowed. Now, this depends upon our assumption. Generally, the module takes the assumption that wherever there is a taxation penalty, any taxation, direct or indirect, our module is assuming it is for the reasons of some type of tax evasion. So that is always disallowed. So we follow the same assumption. Correct? So we will disallow this 5,300 penalty. 5,300. Then comes the next point. Mr. Amit purchased a warehouse building. So no doubt this is a capital expenditure. 20 lakhs in rural area for purpose of storage of agricultural produce. This was made available for use from this date, and the income from this activity is credited to P&L account under the name warehousing charges. Now see, if you remember, there is something like 35 AD, where storage of agricultural produce is covered in 35 AD. So this income and this expense is treated as a special income and treated separately. However, all this is in the old scheme. New scheme has no special reference to this. So under the new scheme, there is no special treatment for this warehousing charges also. And also this building which is purchased for warehousing, which will be part of your regular business activity in the new scheme, which will be eligible for regular depreciation. Now depreciation under IT works out to 65,000 excluding this warehouse building. So we have to compute this separately. And then interest on loan includes 80,000 paid to Mr. Mohit, a resident on which tax has not been deducted. Now, whenever tax is not deducted, 40 clause A gets attracted and you are disallowed 30% of it because the payment is to a resident in India. Now, so here, one is the depreciation. So one is this depreciation working which we have to do, and the other is this interest 30% disallowance. So I'll first do interest disallowance. TDS not deducted on interest. So 80,000, 30%, 8 threes are 24. So it comes to 24,000. And for interest, sorry, for depreciation, I always prefer that we add back the entire depre as per books and deduct the entire depre as per IT. So how much is the depre as per books? 107,250. And we subtract the depre as per income tax. So we have completed all the add items. As far as my understanding is concerned, nothing is missed out. So less depre.
Just one question. The interest on income tax refund, that should also be added, right? The first
Sir,
point.
no, Balamurugam, it will be subtracted, na? Why it will be added? It is on the credit side or debit side? It is
Let me
on the
check.
credit or debit side of your P&L. I'm yet to come on the credit side items. Na? It is here, na?
Oh, okay.
And
Okay.
it is
Sounds
part of some other head, so it has to be subtracted. So now I'm on the subtraction list, correct? So
Sounds good.
I always start with the debit side, and from debit side, I'm going now to the credit side. So we are now on the less item. In that first, I'll take care of interest. So depreciation, and then I'll come to your income tax refund wala part. So
Sounds good.
depreciation first, as per IT Acts, work out to 60,000. This is before or without depreciation on warehouse building. Now for warehouse, it is a building, and for building, if you remember the depreciation, it is 10%. The date of purchase and put to use is before our cutoff date of 2nd October. So you are eligible for full 100% of 10% deduction. It means half depreciation need not be taken. Had this been put to use after 2nd October, we would have taken half depreciation. But here full depreciation will be allowed. So one is the 65,000 and then 10% of 20 lakhs. Correct? So 65,000 plus 20 lakhs into 10%. And this will be full. No need to do it half because the asset is put to use for more than 180 days. Now, adding back this amount, which Balamurugan was saying, that now this income is credited, which is part of your net profit, but this is not covered under the head PGBP. So entire income tax refund will be subtracted. And then whatever is the interest in this refund, that will be considered in other sources. But firstly, entire amount has to be removed from the net profit. Remaining all these items are business head items, so they will remain as it is, but we have to remove the effect of this 30,000 from here. So IT refund. So this will give me my final PGBP income. Correct? And students, any questions or doubts in this? Yes, Aditya.
Sir, how we have taken depreciation as per book, 1 lakh, 7,250, how it comes?
Sorry, I could not hear you. Can you be more clear, Beda?
Sir, audible, sir, I am.
You're audible, but somehow your voice is not very clear. Maybe you can speak slow so that I'll understand what you're saying.
Sir, in working out in add, depreciation as per book, 1,07,250. But how it comes, that's my
It
one
is
doubt,
here,
sir.
na? It is here.
One second.
Depreciation as per accounting is 1,07,000. So since I'm considering the entire depreciation as income tax in subtraction, hence I have first added the entire depreciation, right?
It
Then I'll
comes to
subtract
add,
the entire. Sorry.
sir, it comes add. In this profit and loss account, depreciation comes for add.
Sorry, depreciation comes for.
Sir, in P&L account, the table, chart table, depreciation comes for add.
Aditya, again, I'm not getting what you're trying to say. See, while computing this net profit, which is as per accounts, right? See, our starting point is net profit. While computing this net profit, this depreciation is subtracted, correct?
Okay, sir. Okay, sir.
So now to nullify the effect, I'll have to add back, no?
Yes, sir. Yes, sir.
Correct? Understood?
Sir, understood, sir. But what about the adjustment depreciation, sir?
Which adjustment, beta?
Adjustment, I think 1 minute, sir.
So, beta, see, one option is you add this full and subtract this full. This is what I have done. So I've added the accounting depreciation full and the depreciation, which is as per IT. This is complete depreciation, na? This plus warehouse building. I've subtracted this full. This is the first approach. So what I've done, I've this added full here and I have subtracted full here. Second approach
Okay,
is
sir.
you take a net of this and give the net effect. Either add or less. Correct, na?
Correct, sir. Correct, right.
Understood, na? No doubt.
No, sir. No, sir. Clear, sir.
Perfect. Should I proceed?
Okay, sir. Okay, sir. Clear, sir. Thank you.
Super. Okay. So I was doing calculation. So the total which I am getting of PGBP as per my calculator is 50,34,050. Is it correct? 50,34,050. This is what my calculator is showing. Just confirm.
Just one quick question. Don't we want to add back the interest on income tax refund?
No, I will not consider it here. See, when I'm in my final computation, here I will be considering interest on IT refund, because that is why I removed it from PGBP, because it is not a business income. Na?
Okay. Sorry,
So
you
this
removed the
interest
130,000. Yeah, you removed the
4570 will be
130,000.
included here under the head other sources. Correct?
Okay. Yeah, makes sense.
Perfect. And my PGBP is 5034. Student, just confirm at least this is what calculation I got on my calcine. I'm sure this is correct. 5034,050. You may just cross check. 5034,050. Just others may chip in. Brownie's question for interest for not deposit, why not disallowed? Because see, beta, interest is a remunerative or a compensatory in nature. It is not something like for see what is disallowed under income taxes, where you have to make any payment which is for any act which is forbidden by law. Now, not paying tax or trying to evade tax is forbidden by law, but paying it late and because of which paying interest is not forbidden by law. So interest is always to be considered as something which is compensatory in nature, and hence it is always allowed. Beta Navneet. Navneet, I hope your previous question of depreciation is also clear. Right? So penalty is for evasion, hence it is disallowed. Interest is compensatory, not for evasion, hence it is allowed. Perfect.
Hey,
Okay,
sorry,
students?
one
Tell
question.
me.
So the income tax refund, right? The whole 30,000 we should not deduct, right? We should only deduct the interest portion, right?
No. Understand one thing, beta. See, how we are going with the computation, we are taking this as our starting point, correct?
Yes.
Taking this as a starting point, this whole amount this whole amount and this whole amount have been added, and all these amounts here have been subtracted, correct? So
Okay.
in this net profit, this whole amount is included, is added in this net profit. Firstly, is this clear?
Yes.
Now, firstly, let us talk about this 30,000 in total. Then we'll go to its breakup. This 30,000 includes two portions. One is the principal portion, that is your refund portion, plus the interest portion, right? Now,
Yes.
both principal and interest, both are they income under the head PGBP? Both, in principal and both. You can answer for both collectively or independently. Is income tax refund?
Mhm.
Sorry,
Sorry, what was your question? I missed that.
my question is, this entire 30,000 which is credited to your P&L is made up of two components: principal, that is the refund amount, plus the interest because the refund is received late, correct?
Yeah.
Now my point is whether this principal and interest is income under the head business.
No.
Entire 30 is not income. You agree to this? Under the
Yes.
head business, under the head business, correct?
Yes. Yes.
So what I have to do while computing my PGBP income, I have to remove the effect of entire 30 because this 30 is included in my net profit, correct? Now, my net profit is made up of by including all the credit items and reducing all the debit items. So this 30 was included in 5085. So I have to nullify the effect by subtracting it. Is that clear?
Yep. Yep.
So one thing is clear, this 30 has to be completely subtracted when you are computing only the business head income, right?
Yes.
Now we go to the breakup. This 30 includes one portion, which is the refund amount, that is the principal amount, which is the tax amount, which I paid excess in some past year. So it is returned back to me. And the other is the interest. Now, out of both these, interest is my income under the head other sources.
Yeah, that's taxable under IFOS.
Correct. So what I did is, first I removed the effect of entire 30, which is principal plus interest from the PGBP head, and I added this here in my computation. So when I will be finding out my total income will be this PGBP amount plus this amount. So it will come to 50, 38, 620, right?
Yep.
So the interest is included in my income, but it is included under the head other sources, not under the head business. Correct?
Yeah, that makes sense. Yeah, that makes sense.
Perfect, na?
Yeah.
Should I proceed?
Yes.
Super.
Thank you.
Yeah. So this is my computation under the new scheme. Now, since I have to optimize this, I have to also parallelly do the old scheme. Now, under old scheme, my other details are not much changing, but there is small change in PGBP. So income from salary anyways is not there. Income from HP is not there. Income from PGBP, I'll write working note 2. Now this will be in two parts. Now what are these two parts? The two parts are, from the perspective of the old regime, you have one section 35 AD, that warehousing, which is treated as a special business, and then you have other regular business. So there will be slight change in my workings, and there will be two items which will account for the business head income. Then I'll have capital gains, which will be nil. I'll have other sources, which will be same. It will include the interest on IT refund. There is no change in this also. So this will be my gross total income, and I will have deductions under chapter 6A. This now will be significant here. After subtracting this, I will get my total income, on which I'll find out my tax. And then we will subtract the TDS TCS wherever required. Now, I need to go to PGBP working again. This is the new or the default scheme. Now working note 2, again calculation of PGBP. This is under the old scheme. Now here, I need not spend time in doing the entire working again. What I can do is, I can take starting point as this amount. So I will say PGBP income as per new scheme. This can be my starting point. So it is 50,34,050. Now, between my old scheme and the new scheme, what is different is firstly that this section 35 AD is part of my old scheme as a separate income. So I'll have to now treat it separately. Correct? Plus whatever effect I have of this 35 AD, I'll have to nullify that effect to get my answer. So I have to do this particular working of removing the effect of 35 AD business. Correct? So now add. Now what I did was, here I had taken this depreciation. What is this depreciation dealing with? This depreciation is the depreciation on the warehouse building. Now this depreciation I had subtracted in the new scheme, but in the old scheme, this depreciation will be part of my section 35 AD business calculation. Because in my old scheme, 35 AD is considered as a separate business, a special business under 35 AD. So the depreciation relating to this business cannot be claimed in my regular business. So depreciation on warehouse building. How much it is? It is 20 lakhs, 10%. So it is 2 lakhs. Similarly, I will subtract the warehousing receipts. So warehousing charges, which are part of my P&L, which I had kept included in the regular PGBP income, will now be removed because it will be part of the special PGBP, that is 35 AD. So 2250 has to be subtracted. So 2250 will be subtracted. Right? So after this subtraction, I will get my final PGBP income, which is for regular or other business. Other means other than 35 AD. So how much is left? So I have to subtract 2050. So 20, 30, 29. 29 and 84, 050. Students, please confirm, is it 29, 84, 050? Yes, students? Perfect. Nagarajan, I hope you understood why I added back the 2 lakh depreciation, or wait, you will get to know the answer. Now I come to this special business working. So here that warehousing will be considered because warehousing of agricultural produce is 35 AD business. So warehousing charges will be considered here. And for this business, I have only one expense, which is the warehousing building. Now, what is special about 35 AD? You can get deduction of the capital expenditure entirely. So you need not claim the depreciation. So capital expenditure on the entire warehouse building, which is of 20 lakhs, can be claimed here. So this is my 35 AD business income, which is 250. So now 2984, 050, 2984, 050, and 250, 35 AD business. So it is 250. 29 plus 2, 31, 31, 32. So how much is my total amount? Shouldn't just confirm the workings. Correct? 32, 34, 050. Is this right, students? Now total of this is 32, 38, 620. 32, 38, 620. Now, under the old regime, I'm also eligible for deduction under chapter 6A. Now, what is my deduction? It is under section 80 GGC, which is donation to political party. Now, if you remember here, I had disallowed this donation because it is not a business expense. So it has to be disallowed from business head. And since we were in the new scheme, that is not allowed as deduction under chapter 6A also, but under the old scheme, it will be allowed as deduction here. So the deduction which you have under chapter 6A is this. Let me call it as working note 3. So 1 lakh is my deduction here. So my final taxable income is 3188, 620. Is this fine? I feel there is some calculation error. It is not 88, 22, 34. It is 38, students. I'm sorry. This I did orally and I just missed that one. It is 38. 31, 38, 620. Correct? Yes. So students, anybody, any questions up to this point? So we have reached the point up to taxable income under both the schemes. Now after this, we have to go to the tax. But before I go to the tax, you have to be first clear with the computation of income under both the schemes so that now you can go to the tax calculations. Right? Everybody clear? No doubt, students? Those who may have joined late have to be slightly be patient so that you understand what is going on. Yes, Aditya.
Sir, what is the difference in new scheme and old scheme, sir, in calculation for purpose?
But there are a lot many differences. So this for that you'll have to go to every topic. So as I was explaining here, in the old scheme, you have 35 AD as a separate special business, whereas in the new scheme, there is no such separate business. So in old scheme, we showed business income into 2 categories, whereas in the new scheme, there is no special category like 35 AD, so it was shown combined. Then when it comes to chapter 6A deductions, you will see here no deductions. Here that 1 lakh donation to political parties is allowed as deduction. So in the deduction chapter, if you remember, I just revised also at the start. Under the new scheme, only 3 deductions from the deduction chapter are allowed. But under the old scheme, all the deductions from deduction chapter are allowed. So within each head, there are some expenses which is allowed, not allowed between the old scheme and the new scheme. and the deductions. So basically the idea is the old scheme is removing all the special benefits which were given in the act in the form of special deductions, some special like additional depreciation, 35 AD, all these are special benefits. All these have been removed from the new scheme to make it simple. Nagaraja, but I added back the 2 lakh depreciation because if I have to take the entire capital amount as deduction, I cannot claim both. Now, one I'm taking deduction of depreciation also and also the capital amount. So I can take one of the two. So where I'm taking the deduction of entire capital amount, so the depreciation was on this 20 lakhs only. I taken 10%, that is 2 lakhs as the depreciation. The depreciation of warehouse building has to be added back because here the entire capital expenditure on warehouse building is allowed as deduction. So you cannot take both the deductions na, for the same thing, the capital amount also, and again the this depreciation also, correct?
Sir, in P&L account table, purchases sales also be written, but we cannot take
Sorry, I lost your voice. You said
the
in the
trading
P&L
and
table what?
sales opening stock purchase also given.
Huh?
Purchases and sales in debit side register is also given the amount.
So what? So see, this is the purchase amount, this is the sale amount. So
We can't take, sir, this working note.
we can't,
We can't take for that, sir.
but I'm not getting your point. What you want to ask?
Sir, in the working note, but we have to uh, go for adjustment. What the adjustment they give, we have to take on that, sir.
But we have to all take all those items which are not part of business head as adjustment, and those items for which the law has made a specific exception or law has given some specific adjustment. So purchase and sale are part of regular business or not?
Yes, sir, regular business, sir.
Then why we will make any adjustment for purchase and sale? Correct, na?
Okay, sir, okay, sir.
Only where there is something either which is not part of business head, one, or two, it is having some specific disallowance under the act because of a specific provision like TDS not paid or payment made to your related person in excess of normal amount. All these are the specific disallowances. So we will do adjustment for that. Correct?
Okay, sir, okay. Okay, sir, correct, sir. Correct. Yes, sir.
Perfect. Students, now again I give you all 2 minutes, 2 to 3 minutes. Kindly do the tax computation under both the schemes. Old earning. So these are your taxable incomes. Fortunately, in this first question, there is no special rate income. So there is no winnings, there is no capital gain. So now you have to only apply the slab. So let me know what will be the amount of tax under both. Why? Because see, Nagaraja, you cannot ask this question if depreciation not added, what happened? Means what? See, you have to make adjustment for depreciation, Nagaraja. You please unmute if you have any question because I'm not getting your point why you are asking this. You don't have this choice of not adding the depreciation. As I explained, the second option, what you could have done was you could have taken the difference between the PGBP and the income tax, the accounting and the income tax working. But that is more cumbersome. Instead, simply do what? Subtract the entire amount of depreciation which you get as per income tax working, which I did here, and add the entire amount of depreciation as per books. This is the most simplest way of presenting. The other option was taking a difference. But whenever you take a difference, you have to think that whether this has to be added or subtracted. Instead of doing that, I have took the total amounts. Yes, Arun Sagar.
Sir, actually, I have one doubt related to the additional depreciation, sir. Sir, I watched your all lectures. You told, okay, there is no 100% depreciation allowed on new train. Actually, yes. But I found in case if you climb the 35 AD 35, you will get 100% climb. That time we cannot climb additional depreciation.
Okay, correct. So what is your doubt, beta?
Sir, actually you explain one of your section. There is no 100% climb is there, so that reason it doesn't going to apply. So that reason I wanted to take some confirmation from your end.
Beta, we are mixing two things according to my understanding. What I understood your question. See, 35 AD is not a section for depreciation. In fact, 35 AD says कि I am giving you deduction of the entire capital expenditure. Since I am giving you deduction for entire capital expenditure, you will not take any depreciation deduction, correct? So whenever
Yes,
you
sir.
have any asset of 35 AD, like we have over here, the warehouse building, we will not take any depreciation, whether regular or additional. Why? Because entire cost is taken as deduction in 35 AD working. So whenever you have 35 AD business, the capital asset purchase for 35 AD business is fully allowed as deduction. So there is no question of claiming a separate depreciation on that. I
Yes,
hope I
sir.
could answer your question. Whatever I understood your question, I've tried to answer.
Yes, sir.
Did
Yes,
you get a
actually.
clarity?
Yes, sir. I got. Sir, actually, I have one more doubt. Can I ask?
Yeah, please, you can ask it. Our session is for both, for problem solving and doubt solving. Mainly it is doubt solving only. Tell me.
Sir, actually, you also explained that if
Hmm.
whatever sales you did, it's related to section AD, entire amount you will tax under the BGPP. Sir, it's right.
But which sales are talking about? See,
Sir, in
you
case if you
have
sold
this
anything,
particular, these two figures relating to 35 AD. What is this 35 AD? It is warehousing of agricultural produce. So if you read the 35 AD, there are multiple items which are covered in 35 AD. One of the incomes is agriculture, warehousing of agricultural produce. Now, this is the
sir, I
receipt you.
know. My doubt is different. If I sold, business 35 AD, then entire amount you will tax under PGP8. Sir, it is right.
But firstly, you asked what? You tax entire amount under 35 AD. Which entire amount you want to tax under
Sir,
35 AD?
if I sold the asset which has belongs to business 35 AD, then whatever amount I will get, that is taxed under the
Yeah.
PGP8.
Okay, acha, you are asking that. So if there is any asset which was shown as 35 AD business asset, right? And whenever you sell it in future, entire amount is treated as PGBP income. You are right, beta.
Sir, it's little bit connected to the PGP8. Sir, that time, under section 50D, 50D, 50B, I think 50B, you told lump sum sales. That time, in case if you climb already the 35 to 100%, there is no difference. Means no need to, you need to be take zero as a cost of acquisition. Then my doubt, if you already told whatever sales you done, you need to be considered here only PGBP, then why did you explain that in a capital gain need?
In capital gain, what beta?
Sir, there is one concept, lump sum sale,
Slum sale,
50B.
correct. 50B slum sale. You are right. So,
Yeah, that time you told, in case of asset which are already claimed 100%, like in under the 35 AD or 35, you should have to be considered cost of acquisition as a zero. So did you
correct.
get that point? Yeah.
Yes.
My doubt is, why did you discuss that point in a capital get aid? Because whatever sales will consider the total amount will consider PGP aid. Then why did you told that concept in a
Nee, so you mean to say I should not have said that concept over there? It has to be said over there. The reason is that when you are solving a capital gain question, and let us say your business had 35 AD. So in 35 AD, like here itself, we have a 35 AD business where this entire cost is allowed as deduction, correct?
Yes, sir.
Now in capital gain in 50B, what is the rule? The rule is, what do you take cost of acquisition as? The cost of acquisition taken is the net worth of the business. What is net
Yes,
worth?
sir.
Assets minus
One
liabilities.
liability.
What is the value of asset? The value of asset is the
Yes,
book
sir.
value,
Yes, sir.
right? Now
Yes,
comes the
sir.
question, book value as per what? As per accounts or as per income tax?
Sir, as per income tax,
Simple. Now as per income tax, what is the book value of this?
zero.
That is what I said.
So, sir, that reason only I got that doubt. You explained this here only, a PGP8. Then you also taken that concept in capital gate. So that reason I think if there is any connection, otherwise I
So there
misunderstood
is a
something
connection,
wrong.
beta. So that is why now, what is the connection? Once you understand this, that we have to take the book value as per Income Tax Act, correct? You understood it?
Yes, sir. Yes,
So
sir.
if it has to be as per Income Tax Act, you tell me what is the book value of this in income tax. It will be 0.
Yes, sir.
That is what we discuss in 50B. You have to take the net worth where it will be taken as 0. Simple. Correct?
Sir, means,
Now,
sir, just I told, whatever the sales we done under pay, which is related to the 35D, there is no matter, I means capital gain, capital loss, there is no subject, there
correct,
is no,
correct.
yeah. So I got confusion. Entire amount will show under PGP8. Then,
Correct.
sir, you also explained that time, so I got confusion.
No problem. Now, is it clear?
Yes, sir. Okay. Thank you, sir.
Perfect. Good. Chalo, students, I hope you all have completed the tax calculation. In the meantime, I'm solving the doubts of others. Yes, Aditya.
The tax calculation is done.
So I'm
Tax,
waiting for you all to do. If you all have done, I'll do my working now.
sir, I also completed the tax calculation.
So tell me the amounts.
Then in new scheme, 18 lakh 11,586, sir.
18 lakhs, 11,586
586, sir.
in the new scheme. Okay. And in old?
Old 10 lakh 54,086, sir.
86. Correct?
Yes, sir. But next step, what should I do is for confusion, sir.
Let's see now. Let's see. First, let me confirm these amounts. Let me see what amounts I am getting. So, computation of tax, new scheme, old scheme. I'll just rub this part from here because it is not part of PGBT. Okay. Okay. Now,
Okay, sir. Okay.
now what is my total income here? My total income is 50,38,620 and there is no special rate income. So in new scheme, 50,38,620. This is my total income. And in my old scheme, my total income is 31,38,620. Correct? 31,38,620. And the best part is there are no special rate incomes. Now, I'll just go back to the chapter if by chance anybody has missed the tax rates. So these are the tax rates, the old scheme rates and the new scheme rates. So the new scheme has given the tax rate where the blocks or the slabs are in multiple of 4 lakhs. So 4, 4 to 8, 8 to 12 and so on. And the tax rates are in multiple of 5%. So 5, 10, 15, 20. So it is easy. The old scheme has different basic exemption limits. So if you're not a senior, which is the present case, your basic exemption limit is 2.5. Thereafter, from 2.5 to 5, it is 5%. 5 to 10, it is 20%. And above 10, it is 30%. So we have to apply these tax rates and compute the tax. So here, if I have to compute tax on this, so up to 4 lakhs, it will be nil. Correct? 4 to 8 lakhs. This is how much? This is 4 lakhs, 5%. Then 8 to 12 lakhs. This is again 4 lakhs. This is 10%. Correct?
Yes, sir.
12 to 16 lakhs. Again 4 lakhs, 15%. 16 to 20. Again 4 lakhs, which is 20%.
Yes, sir.
20 to 24. Again 4 lakhs, 25%. Right? Correct,
Yes,
na?
sir. Correct, sir.
See, and then you have the last tax rate of about 24 lakhs. Now, about 24 lakhs, how much is the amount? So 5038 minus 24. How much do I get? I get 26, 38, 620. Correct, na?
Okay, sir.
Into 30%, right? Correct, na, students?
Yes, sir.
So this is of total basic tax. Let me do working on my calci as well. How much am I getting? Okay. 1091,586. Is this correct? The basic tax as per the new slabs? Students, $1135 250 now it is saying. How about $1135? I'm getting 1091.
Sorry, sir, I missed that calculation.
Now, students, most important. To this, I have to add surcharge. And from this, I have to subtract marginal relief. Now, surcharge, why surcharge is applicable? Because my income has exceeded 50 lakhs. So it is above 50, but below 1 CR. So we saw the surcharge rate for this is 10%, 10% of basic tax. So it will be 109,159. Now, whenever there is surcharge, you have to calculate the marginal relief also so that you get your net tax. Correct? Now, what is this working of marginal relief? I'm just showing it here. Marginal relief, working note 4, continue from below. Here I will write working note continued above. Fine. Now, students, how do you calculate marginal relief? You calculate tax including surcharge on total income. Now, what is this amount? This is the total of this tax including surcharge. So again, how much am I getting? 1091,586 plus 109,159. I'm getting 12,00745. 12,00745. This is my tax including surcharge. Now, from this, I have to subtract what? Tax on rupees 50 lakhs. Now, obviously, this will be without surcharge because surcharge applies after 50 lakhs. Again, students, you have to follow this same slab working. Only the thing is this amount will change because now you are calculating tax on 50 lakhs. So if you are calculating tax on exact 50 lakhs, so it will be 4, 4, 4, 4, 4, and here it will be 26 lakhs into 30%. Correct? So this entire working in the last part, this will change. This will be 24 or 26 lakhs into 30%. So how much am I getting? 1 second, let me calculate. My tax on total income of 50 lakhs as per this slab of 50 lakhs applied to this. Okay. So I'm getting, students, 1080. So this is my difference in tax. Now from this, I will subtract difference in total income. That is total income minus rupees 50 lakhs. Correct? How much is my total income? It is 50, 38,620 and minus 50 lakhs. So this amount will be directly 38,620. And this difference is 127.45. So my marginal relief, students, that I'm getting is 120 minus 38. So it will be 82, 125. Right, students? So this amount is 82,125. So basic tax plus surcharge minus marginal relief. This will give me my net tax. So this plus this minus this. How much am I getting? I'm getting 11, 18, 6, 20. So this is my net tax under the new scheme. Correct? Yes, Nagaraj Abida. Wherever you have surcharge, you have it. Correct? Right, students? So 1163, 360. What is this amount? Acha, cess. That I will consider. You want to add cess? Chalo, theek hai. Chalo, add 4% cess. So Navneet is giving me the final amount, including cess also. So Navneet says on this amount, when you add cess, you get 1163, 360. Chalo. So adding 4%, 1163, 3, correct? Rounded to nearest 10 rupees. 360 you are saying. So it is 360. Okay. Is this fine, students? Clear? Anybody, any questions or doubts? Right? So, 364 है तो 360, correct, you are right. So, now we go to the old scheme. Now under old scheme, how you will compute tax? Up to 2.5 lakhs, it will be nil. Then 2.5 to 5 lakhs, that is on 2.5 lakhs, it will be 10. Correct, na? Sorry, 2.5 to 5 lakhs, it is 5%, not 10. Then 5 to 10 lakhs, that is on next 5 lakhs, it is 20. And directly above 5 lakhs. Above 5 lakhs, how much is above 5 lakhs? So 31, 38, 620, right? 31, 38, 620. From this, when you subtract 5 lakhs, how much will you get? You will get 26, 38, 620 into 30%. Now, the total of this, how much am I getting? So I'm getting 754. Sorry.
Sir, about
Yes.
10 lakhs, sir. About 10 lakhs.
Sorry. 784. Tell me, beta, what you are saying?
Sir, about 10 lakh we have to
Yeah. I'm
that-
just changing. It is so about 10 lakhs. How much is left? 21. Correct? Yes. So Navneet is giving me basic tax of 754,086. Correct? 754,086. Now this amount is below 50 lakhs, so there is no surcharge. Directly 4% health and education cess. So here your final tax after adding 4%, how much is given? Yes, Arun Sagar and Navneet and Nagaraja. Yes, 784,250 rounded. But students, this is not done yet. I have to now compare this tax liability with AMT liability. So I have to come back to calculation of AMT. Working note 4 continued from below. Okay. Now students, what does AMT says? AMT says that if you are other than a company and you have claimed any special deduction either under 10AA or 35AD or 80JJAA, then you have to recompute your income as per AMT. So I will start with this total income. Now, what is your total income over here? 31,38,620. Now, we have a special benefit of 35 AD. What is that special benefit? You have taken capital expenditure as deduction. What is that amount? 20 lakhs. It says add back. But once you add back the capital expenditure, again, you get the benefit of depreciation. So depre on it. How much is the depre? 2 lakhs. So you add back the capital expenditure, which is the benefit under 35 AD, and you subtract the depreciation on it. So this becomes your adjusted total income for the purpose of AMT. How much is this? So this is 20 minus 2 is 18. 18 plus 31 is 49. So it is 49, 38, 620. Correct. Now AMT is at the rate of 18.5% and again plus 4% cess. How much I'm getting at 18.5% of 4938? It is 913645. Now adding 4% to this will be my final AMT liability. One. How much you are giving, beta? 4938620. What is this? 950290. Check. After adding 4%. Student, there is some slight difference. You have given 950. Arun Sagar is saying 290 and Navneet is saying 190. I'm also getting 191, so rounded off to 190. So Arun Sagar, just confirm. I am getting 190. I think there is a typo at your end. Yes, Aditya, exactly. I'm getting this amount. So rounded to 190. So 950, 190. Now, firstly, in the old scheme, out of both these, whichever is higher, so your final tax liability under the old scheme is 950, 190. Correct? So if I come over here, it is 950, 190. Bracket में under 115J B AMT provisions. Correct? Sorry, it should be JC. So 115 JC as per AMT provision, this is my liability. And here, my final liability was how much? 1163,360. 1163,630. Now, this is my liability here. This is my liability here. So what will be my advice? Since liability under old scheme is lower and further he would be allowed AMT credit because you have taken AMT, whichever is higher, so you also get AMT credit. Hence, Mr. Amit should opt for shifting out, that is going in the old scheme, right? Okay, students, I hope this is clear, this is understood. Anybody having any questions on this? This was quite detailed and elaborate, covering AMT and everything, correct? Yes, but Aditya.
Sir, in AMP's addresses, my amount is 9,50,191. But 1 rupees difference, there is any problems, sir?
But you rounded off to nearest 10 rupees, na? We even rounded off this amount. So this was also not exactly this. It was something 34 or 33. So we have to round off the tax also to nearest 10 rupees, na? So it became 190 instead of 191.
Yes, sir.
Correct, na?
Correct, sir.
Perfect. Chalo then, students, we'll go to this second sum, which is slightly different from the first one. So you can take a screenshot of this, or rather I'll keep this on the screen. Yes, this is only this much. But at the same time, we'll take the 10 minutes break. In the meantime, you can start just solving this, right? And I start solving after 10 minutes. Sure. Let us have our break. hope you would have by now solved it. Now see what is given. Mr. Ayush, resident, age 54, so not senior, engaged in business of manufacturing textile, earned a profit of 80 to 45 as per accounting P&L after debiting creating following items. Depreciation as per books, this we will fully add. Short-term capital gain, this we will subtract because this is not part of PGBP. Received income tax refund, again this entire amount will subtract. Dividend from Indian companies, again this entire amount will subtract. Additional information, it installed new plant and machinery on 110. Now see, it is installed on 110 and it is put to use on 11. So now this is less than 180 days. I'm sure you all know this, that wherever it is less than 180 days, your depreciation is half. Now interestingly, they have said that depreciation, including additional depreciation on this amount of rupees 65 is included in the depreciation debited to P&L account, which has been computed as per income tax. So depreciation has been taken. Mr. Ayush took a loan of SBI. So interestingly, we don't have to do anything for depreciation here because they have already taken the depreciation and that is including the additional depreciation. So we have nothing to do here. Now, the only point is, if you recall, in the old scheme, additional depreciation is allowed, but in the new scheme, only regular depreciation is allowed, additional is not allowed. So if we have to solve this by the new scheme, we'll have to remove the effect of additional depreciation in the new scheme. Fine. Then Mr. Ayush has taken loan from SBI of 50 lakhs on 1925 at the rate of 10.5% to purchase this machinery. So this machinery has been purchased by taking a loan from bank. The loan is taken on 19 and the total interest up to 31st March has been paid in March itself and the same is debited to P&L. Now students, here interesting thing is the asset is put to use on this date and they have started paying interest from this date. So interest is paid for September, October, November, December. This period, that is from this date to 31st December, is your capital expenditure as per accounting standard also and as per income tax provisions also. And the interest from here to here is your revenue expense because from 1st January, you have started using the asset, it is put to use. So up to the date the asset is put to use, all expenses are capitalized. This is what we have studied in accounts also, and the same provision applies in income tax also. Now this effect will have to adjust because they have debited the entire amount to P&L. If entire amount is debited to P&L, so there is something which is wrong, which we have to correct. Advance tax paid is this much. Ayush purchased goods for rupees 40 lakhs from Ram, his brother. Again, market value is 35, so 5 lakhs is unreasonable. That has to be added back. 40,000 life insurance premium, married daughter, not dependent, sum assured 5 lakhs. Okay, this is 80C. 45,000 is paid towards health insurance covering himself. This is 80D. And he has withdrew 1.5 crore. So this is, if you remember, there is a limit of 1 crore for cash withdrawal in a year. If you exceed that, there is a TDS. So this point is relating to TDS. Okay. You are required to compute total income of Mr. Ayush for AY 26-27, assuming that he has shifted. Okay. So this entire question is of the old scheme. So all the deductions and everything will become relevant here. Yes, Arun Sagar, you are right. Yes, good Arun Sagar. So TDS section also Arun has mentioned it is 194N. So this some students we have to do only the old scheme working, not the new scheme working. So second, so this is computation of income. Mr. Ayush. This is old scheme only, students. And this is PY 2025-26. Or you can write AY 26-27, both are same. Okay. income from salary, HP, PGBP, CG. Here we have one CG income. Other sources, we also have other sources, but we do not have we don't have salary also here, correct? Yes, and we also do not have, yes. So this is working note 1. This will be my gross total income less reduction under chapter 6A. This will be relevant here because we are in the old scheme. So working note 2. This is your total income, then tax on it minus TDS, TCS, advance tax. We have few of these items here. And then this is your tax or refund due. Fine. Okay. So working notes. Working note 1. Calculation of PGBP. Okay. So our starting point is net profit as per your accounting P&L. 80 to 45, right? Add so depreciation is there. We will add this depreciation, but no need to add students because here they have already mentioned that depreciation they have taken as per income tax provision. So no need. This will have to subtract. This is also subtract. This is subtract. So these are all subtract items. Now add items I'll get from here. So depreciation is already as per. So depreciation which is debited to P&L is already as per income tax rules. So that is not a challenge, right? So this will not come in the add part. What will come in the add part is this 5 lakhs, which is unreasonable, correct? Purchases from related person, section 40A2. So it is unreasonable to the extent of 5 lakhs. Then this is done life insurance. Only one item, students, nothing else. For this interest, the capital portion, correct, na? So this also we have to add. Interest on loan up to the date asset is put to use is capital expenditure. A. Now you have computed from here to here. How many months are they? So September, October, November, December. These are 4 months. December, January, February, March. These are 3 months. So total 7 months interest is calculated, and the interest is at the rate of 10.5 out of 7. 4 is, but they have not given you the amount. Okay, so we'll calculate the whole year's interest, and out of whole year, these 4 months are to be taken. So 50 lakhs into 10.5, this will give me whole year's interest, and from that we can find out the 4 months interest. Correct? So 50 lakhs into 10.5 into 4 by 12. Right? So I am getting the amount of 50 into 10.5% into 4 by 12. So I'm getting 175, and it is confirmed also by Arun Sagar also. Yes. Navneet Beda, what is 158,333? I'm not getting this amount. I'm getting around 1.75. Arun has confirmed that. Please recheck. Again, you are saying 1175. 175. No? Correct. So we are getting this amount. 175 is the amount we both are also getting. Yes, Aditya.
And sir, we can take 7 divided by 12, but why we take 4 divided by 12 per month?
See, when I'm multiplying this by 10.5%, is it giving me per annum interest or is it giving me 7 months interest?
Per annum, sir, per annum.
Then I'll divide by 12 only to get 4 months interest. See, had they given me the amount debited to P&L for this interest, let us say the interest amount would have been given in the sum. Then that interest I would have divided by 7 and multiplied by 4, because that interest would have been of 7 months. But here I have to calculate interest using the interest rate, which is per annum. So when I multiply my principal portion with the per annum rate, I will get annum interest. So I'll divide it by 12 only. Na?
Okay, sir, okay. Got it, sir. If they give per annum amount 12.5, 10.5, then we can pay for that
Yes,
amount.
correct. Now in less, we have short-term capital gain 10 lakhs. We have refund 1550. And we have dividends 15 lakhs. So these are all to be subtracted. STCG, income tax, refund, and then dividends. Correct? So STCG amount was 10 lakhs. This was some 1550. And this amount was 15 lakhs. Now, interestingly, there is one more thing to be subtracted, students. What is that one more thing which will be subtracted? So that is the interest, depreciation. Depreciation on this interest which is capitalized. Because this they have not considered, because they had not taken this interest in the capital value of asset. So how much interest we are capitalizing? We are capitalizing 175. Now here I will take normal and I will take additional both. So 175 into normal rate of depreciation. Now this is capitalized in which asset? It is capitalized in plant and machinery. The rate of depreciation for plant and machinery is 15%, but I have to take half. Why half? Because asset is put to use for less than 180 days, so you take only half of the depreciation. Similarly, additional rate is 20%, and again for additional you will take half. Correct? Yes, Navneet, right. So I am getting the depreciation. So at the rate of 15% and making it half, I'm getting 13,125. And now at the rate of 20%, half means 10%. So 10% is 17,500. Right, students? Yes, correct. So 13,125, 17,500 is what I subtract. Now after this subtraction, I get my final PGBP. So I'm getting my PGBP as amount is 8245 plus 5 plus 175 minus 10, 1550, 15 lakhs minus 10, 1550 and 15 lakhs and also minus 13,125 and 17,500 minus 13,125 and 17,500. Okay. So students, the figure I am getting is yes, Nagaraj. I'm getting the same figure. So 63, 73, 825 is my PGBP as per the old scheme. Right? Very good, Aditya. Now, capital gain, I have STCG and 1A because on this STT was paid, so this will fall under 1A. Correct? How much was the amount? So STCG is 10 lakhs. And in other sources, I have two incomes, dividend and interest on IT refund. Dividend is 15 lakhs. Interest on IT refund is 15. No, interest is not 15. That was the total amount. Out of 15, 15 interest is 4550. So it is 4550, not 15. So total other sources is 15,04550. Correct. Now a total of all this. So 63, 73, 825 is PGBP plus 10 lakhs plus 15,04550. Right? So I'm getting 88, 78, 375. Students, 88, 78, 375. Students, is this your GTI as well? Navneet is asking, sir, why interest on loan is added? But interest on loan is added for 4 months because it is a capital expenditure. Why it is a capital expenditure? I took loan on 1st September 25 for purchasing this plant and machinery. So my interest started from 1st September 25, but the asset was ready and put to use only on 1st Jan 26. So entire September, October, November, December, 4 months, I paid interest when the asset was not yet put to use. And as per our accounts, as per our PGBP provisions, this is a capital expenditure and hence it has to be added back. Correct now? Perfect. Should I proceed? Now an interesting part here, that is deductions under chapter 6A. Now, we have section 80C. Now in section 80C, we have this item for 80C. What is given? You paid 40,000 as life insurance premium. This is covered in 80C for the life of married daughter and the person is not dependent on you. So firstly, the question is, if your child is independent, are you eligible to claim deduction under 80C? Yes or no? Very good. ATC, even for not dependent children is allowed. The condition of dependent children is in 80D. So 80C, no challenge. You can very well take in 80C, right? So now the sum assured is 5 lakh. Policy is taken after 1st April 2012. If you remember that date, policy taken after 1st April 2012, 10%, up to 10% of this amount premium is allowed. So it comes to 50,000. So up to 50,000 premium, you could have claimed deduction. Anyways, you have 40,000. So entire 40,000 is eligible. Yes, very good, Arun. Very good, Navneet. So entire 40,000 will be eligible. No challenge at all. Right? LIP for independent children. Maximum up to 10% of 5 lakhs. So anyways, 40,000 will be fully allowed. Now we come to 80D. This is for medical insurance premium for self, spouse, and dependent children. So we come to the second point. Now here there is one small issue. They have said his children. Which children? Because if that child includes this daughter, you will not be eligible for claiming the amount related to daughter because daughter is not dependent. But here that amount is silent and they have given lump sum. So we are going ahead with the presumption that it is not for this daughter. That is why this entire 45,000 can be taken because anyways the breakup of this 45,000 is not given. Now importantly, what is the maximum limit? Since the person is not senior, now even though you have paid 45,000, since the person is not senior, your limit, yes, very good, Arun, Navneet. So the limit is 25K. So the deduction here is 25K. Anything else? Deduction. Nothing. So my total deduction 65,000. Since it is old scheme, all the deductions are allowed. So my taxable income is 88,13,375. Correct, students? Now we have to go for tax computation. Working note 4. Arun Sagar is saying 80 TTA interest. Yes. So, but do we have interest in our income? I don't remember. No, there is no interest income on saving bank account. Na? 80 TTA is for interest on saving bank account. So if it is included in your income, then only you get deduction of 80 TTA. So there is no income on account of saving bank account. Navneet, but a current account transaction that is part of TDS. So you would have paid TDS or the bank would have deducted TDS. So that we will take in the this amount here. We will take that TDS credit here. Correct? All things done, student? See, I have purposefully taken those questions which have different adjustment, different than what we have done in the previous sum, so that you get all different topics revised. So computation of tax. So what is our final TI? Our final TI is 88,13,380 rounded. Correct? Now out of this, you have one special rate income, which is under section 111A. How much is that amount? 10 lakhs. So I will reduce this 10 lakhs here because this has a special rate. So balance regular incomes is 78,13,380. Correct, students? 78, 13, 380. Now for this 17, 38, 380, what will be my working? So I'm not seeing here, no? So up to 2.5 lakhs, nil. Then 2.5 to 5 lakhs. On this 2.5 lakhs, you have 5%. Then 5 to 10. On this 5 lakhs, you have 20%. And then how much income is left? About 10 lakhs. So it is 68, 13, 380 on this 30%. Correct. So how much am I getting? So 5% on 2,50,000. So it comes to 12,500. Then 20% on 5 lakhs is 1 lakh, and then balance 20,444. So this amount, students, I am getting as 21,56,514. Correct. To this, I will add tax on STCG under section 111A, that is on this amount. So it is 10 lakhs into 20%. So it is 2 lakhs. Correct. So how much is my basic tax? $23,56,514 plus surcharge minus marginal relief. Okay. Again, my income TI has exceeded 50 lakhs, but it is below 1 crore. So surcharge will be at the rate of 10%. So it will be 235,651, right? And then working. So calculation of marginal relief. Working continued from above. Now, how do you calculate marginal relief? You have tax including surcharge. So how much will be your tax including surcharge? So 23,56,514 plus 235,651. So how much it comes to? 25. Sorry. It comes to 25,92,165 minus tax on rupees 50 lakhs. Students, calculate the tax on rupees 50 lakhs by using the same slab. This is difference in tax minus tax, sorry, difference in income. Which is TI minus 50 lakhs. How much is TI? TI is 88. 88 minus 50 is 38. So 38, 13, 380. 38, 13, 380. Students, anyways, your tax is this. After reducing the tax on this amount will be very small. So definitely your marginal relief is going negative. So it is nil. I'm just, for the purpose of saving time, I'm skipping that 50 lakhs working. But orally you can say that it is going nil. Correct? So marginal relief is nil. You add your 4% health and education cess. So you will get your final tax liability. How much is the students? 4%. So this plus this minus relief, which is nil, plus 4%. Yes, Nagaraja. So I added 10% surcharge. No? So what is this? This is 10% surcharge. No? Which surcharge you are talking about? I've already taken surcharge. I've even shown the marginal relief working. So students, I'm getting this amount including that 4% as 850. Right? See, Navneet, technically there is no limit up to which marginal relief will be there or not there. But see, marginal relief comes when your income is just above 50 lakhs by 2-3 lakhs. Here our income is above 50 lakhs by 38 lakhs. So here definitely the marginal relief will be nil, but still you have to show working as a part of working out. Correct? Now, so my tax comes to, now I have TDS. What is this TDS? This is 194N TDS, which is calculated at the rate of 2% on the amount exceeding 1 crore in cash withdrawal. So my cash withdrawal was, if I'm not wrong, 1.5 crores. So from this 1.5 crores, you reduce 1 crore. So 50 lakhs, right? Into 50 lakhs. This is the TDS under section 194N. Plus, there was some advance tax also, students, in this sum. Very somewhere advance. Yes, 1750. So 1750. So 1750 plus 2% of 50 lakhs, which will be 1 lakh. So it will be 1850. So this amount, whatever remains, 845, 850 is your balance tax payable. Right, students? Great. Correct. Now, you're right. Understood all? The students understood? Everyone? Any queries? Yes, Aditya.
Sir, in ATC, can we, if the question given for ATC, in ATC tuition fees, GPF can be come for ATC, sir? It belongs to ATC, sir.
Which one? Which one?
In ATC, GPF tuition fees also belongs to ATC, sir.
What is GPF, beta?
Sir, if the question also give for question LIC also given. LIC belongs to ATC, I know, sir, but GPF tuition fees also belongs to ATC, sir.
So that's what I'm asking. What is GPF?
Sir, that is GPF means gross. If the question give for GPF for 50,000, if they give as a
Which
assumption,
point? Which point you are
sir,
talking about?
sir, in question they did not give. If
Huh.
I am assuming that if they give for GPF
So what is
or tuition
GPF? I'm
fees,
asking you GPF. You are not giving me full form, beta. What is GPF you are talking about? You tell me what is full form so I can tell you now whether it will be allowed or not.
gross provident fund, sir.
General Provident Fund or Gross Provident Fund?
Sir, general provident fund, sorry, sir.
It is allowed. General
Sir,
Provident Fund
tuition
is
fees,
allowed in
sir.
ATC.
Sir, tuition fees.
Huh?
Tuition
Tuition
fees,
fees
sir.
for 2 children is allowed, which is tuition fees means not private coaching. Tuition fees means school, college, universities fees. Correct?
Mm-hmm.
All these are allowed now. So why
School
you have a doubt? See, if you are in the old
college.
regime, these are allowed. If you are in the new regime, these are not allowed.
Okay.
So it depends upon which regime you are working, na?
Okay, sir. New regime, ATC is not allowed.
Right. In new regime, beta, we discussed today starting. That is why I took the basic revision of this topic at the start. You were there.
Okay, sir. Okay, sir. I understand, sir. I understand.
So here we discussed now that only 3 deductions are allowed in the new regime: 80CCD2, 80CCH2, and your 80JJ. Except these 3, no other deductions are allowed in the new regime.
Okay, sir. But what about, sir, AMT amount, AMT calculation, sir? Sir, AMT calculation, sir.
So here, beta, AMT we have not done. Why? Because when AMT is applicable, again, see what we had discussed here in AMT. Wherever you have claimed one of these deductions, then only AMT applies. What were those the deductions? It was 10AA. We have not claimed here. It was 35AD.
Okay,
We have not claimed here. And it was 80JJA. So none of these deductions are here. So we did not go for AMT. Na? AMT will apply. See, we studied this at the start. So you should have claimed one of these deductions. So
okay,
if
sir.
none
Okay,
of
sir.
these
I understand,
deductions are
sir.
claimed, so again no AMT. Correct?
Okay, sir. Okay, sir. Okay, sir. I got it, sir. Got it.
Perfect.
Clear, sir.
Good. So again, I have taken one more sum. So though the time is up, at least we'll try to take it up orally for the benefit of all. So what is this question? So Mr. Ashok is a resident. Now here the age is 61 years. So this person will be senior. The difference will be only in the old regime. New regime has no special treatment for senior citizens. But in old regime, you will get the higher slab. Now here, the basic exemption limit instead of 2.5 lakhs, here it will be 3 lakhs if you are doing computation by the old regime, correct? Second difference of senior citizen in the old regime is the interest deduction, interest under 80TTB will be up to rupees 50,000 and it will cover interest on saving bank account plus it will cover interest on FD both. So this is the only difference where the person is a senior citizen. Otherwise, there is no special treatment even in the old regime for senior citizens. Yes, Navneet, correct. Now, he is engaged in wholesale business of stationery products and he has provided you following details. Now, what are the things? He has received interest on capital from his partnership firm, which is at the rate of 14%. Now, you'll have to understand, students, this is his PGBP income. So whatever partnership firm pays to the partner, in the hands of partnership firm, the amount is allowed as reduction, and in the hands of your partner, it is PGBP income. But section 40 clause B, that is small b's, allows only up to 12%. So for us also, only up to 12% is our income. Now this is at the rate of 14, so we divide this by 14 and multiply it by 12. So for us, what will be income under PGBP is only 1,20,000, not entire 140. Next, share of profit. So this is exempt in our hands under section 10 bracket 2A. Why? Because the firm itself would have paid the tax. Next, working partner. This is again our PGBP income. Now this amount is given as net of TDS. Now I'm sure you all know that whenever it is net of TDS, you have to gross the amount. And while grossing up the amount, you will have to divide this by the TDS rate. So what is the TDS rate, students, for this particular income? Can anybody tell me? Yes, very good, Arun Sagar. So what is the TDS rate? It is 10%. It means this amount which is received by you is 90%. So how much amount you will consider in your PGBP head? 1 lakh. And the 10%, that is 10,000, will go to TDS, which will be deducted from your final tax liability. Next, interest from bank on FD. This is other sources. Plus, this is also eligible for deduction under section 80TTB up to rupees 50,000. Correct? But this all will be under the old scheme. Again, this is net of TDS, so divided by 90%. So the amount that you'll consider in your other sources is 150. Interest on saving bank account. This is also other sources. Again, income tax refund received. Now this amount, only this portion will go to other sources. Now, net profit from wholesale business 660. Amount debited includes the following depreciation as per books. Again, we will add this fully and we'll subtract the income tax depreciation fully. Motor car expenses are okay. Municipal tax for shop is okay. It says for 2 half year, payment of 1 half year is this and other half year is this. Now, since the payment is made after the due date of filing returns, 43B will trigger. And since 43B is triggering, it will disallow half of your amount. So half of this amount is only allowed, balance half has to be disallowed. Then salary to manager by way of a single cash payment. Again, here the section which is attracted is 43. This entire amount is disallowed. I hope you all are getting this. Now, WDV of the assets, computer printer will have to compute depreciation on all these items and under the income tax law, correct? So, the depreciation rates will be this. For motor car, the depreciation rate is 20%, but 20% is personal use. So whatever is depreciation, will take only 80% of it. Why? Because 20% is personal use. Now this car is acquired on 31/12. It means you will get only half of this rate as depreciation. So you will take half of the depreciation rate and then you'll make it 80%. Why 80%? Because 20% is for personal use. Now he owned a house property in Mumbai, which he had already sold in January 21, that is long back. However, arrears of rent were received in the current year. Now, whenever arrears of rent are received, this income will fall part of HP head. And this will be after the standard deduction of 30%. So we'll subtract the standard deduction of 30% and only balance will be allowed. Correct? Yes. Then life insurance premium of independent son. This is allowed under 80C. PPF for his wife. This is also allowed under 80C. Health insurance premium paid by way of. This is allowed in 80D. Now here, up to max 1.5 lakhs. Here, up to max 50,000. Why 50? Because the person is senior citizen. So instead of 25,000, now the limit becomes 50,000. Correct, students? Then contribution towards Prime Minister's National Relief Fund. This is under 80G. So students, I hope you got this all. I think somebody has given me a correction. Yes, Arun Sagar, thank you. The students, one small correction. Thank you, Arun Sagar, for pointing it out. The rate of depreciation for motor car is 15%, not 20%. Thank you, Beda. Yes. Yes, now 80G 100% because it is National Relief Fund. And we have to compute income and tax as per the old regimes because he opts out from the new regime. So all these deductions which I marked will be available. So this is how the working is going to happen. So students, I hope you understood how to do computation and how to find out the total tax liability. We have to parallelly apply both the regimes for the purpose of determining, but where the question is only asking you for one regime like this question, you'll do the working only in that regime. Yes, Aditya, beta.
Sir, this question is belongs to new regime, sir. Different type of them because in the
No, but it
last
is old
time
regime,
they
na?
give, but
It is said,
they
na,
give
assuming he opts
optional
out.
out from the optional out from they give. That's why, sir.
So, beta, this is new regime, na? Now,
Okay,
15 BAC is new
115.
regime, na? So when you say opt
Okay,
out,
sir,
it means
sir.
you go to the old regime.
Okay, sir. Okay, sir. Sorry, sir.
Correct, na?
Correct, sir. Correct, correct. Out of if they give that is new regime, sir.
So this is new regime. Now, since you're opting out, it means you're in the old regime, correct?
Okay, sir. Okay.
Perfect. Yes, students, I hope you all understood all the things that we discussed today. And I'm sure this session will help you a lot in doing your revision of this topic. So kindly solve further sums. You can use all the material available on our portal in the form of MTP, RTP, and also the past exam questions. So thank you very much, students. Let us all pledge that we will work very hard for our attempt and come out with flying colors. So best wishes from my side and best of luck. Thank you. Thank you very much. Yes, Ashok ji. Thank you very much to you also, sir. Good night, Ashok ji. Bye bye.